Hi again, I'm Eduardo from King Estates, and today I'm with Carmelo from Martínez-Echevarría law firms, and we are going to be talking about the taxes involved in purchasing a property in Costa del Sol. Hi Carmelo,
Hi,
how are you?
I'm fine. First of all, I want to say that I'm very happy to be here.
Thank you for
and
that.
have the opportunity to explain in a very broad sense.
Of course.
Trying to establish a first approach to taxation, taxes involved in the acquisition of a property here in Spain, specifically in the Costa del Sol.
Fantastic. Well, the pleasure is mine, you know. It's very important to me and to our clients to know about this stuff. Well, Carmelo, please tell me a little bit about you.
I'm a Spanish qualified lawyer working in the tax law department of Martínez-Echevarría, as you said previously. I'm specialized essentially in tax law. I've been working 6 years in an international law firm in Madrid, and I have joined Martínez-Echevarría recently, approximately 2 months ago. I cover a broad scope of tax matters. I'm not specialized in a specific part of taxation, but it's true that, according to my previous background, I'm primarily involved in real estate transactions, transfer pricing analysis between relations of company and the shareholder, asset holding companies, and in general sense, all matters covered by international taxation, but under the Spanish perspective. I'm a Spanish qualified lawyer. I am not an expert on the taxation of other countries,
of course.
and that's my general background on taxation. I have also lectured at the university, so I have also this part of expertise, and that's my current situation now.
Yeah, I mean, and you are a smart guy, you know, because you moved from Madrid to Málaga, you know, close to the beach.
Yeah, probably for this part of my experience, yes. I'm sure that this
fantastic.
It has been a very smart decision.
Yeah, I know. This is a fantastic place to be and to live, you know. It's incredible. How can you enjoy this type of countries and cities, I'm sorry.
In fact, it's absolutely marvelous, and for sure the weather, the people here is different. So
yeah,
I'm very, very glad to be here, and for sure at this moment I can say that the movement has been the correct one.
Excellent, excellent. And Carmelo, which are the Spanish taxes for residents and non-residents?
The main point here, and we can talk in depth about after this question on this, is the question of residency, tax residency in Spain or not tax residency in Spain.
Yeah, that's the most common question that I have.
And it's a very important topic, and probably we can talk about after that. Since tax residency is a question that must be planned by every single individual, and more essentially when they plan to transfer on a at least permanent basis his or her residence to Spain. That said, the main difference between the resident and non-resident is the kind of income which is taxed in Spain under each specific tax figure. Essentially, personal income tax, which is the main tax applied to Spanish resident individuals, is a tax that at the end of is levying the worldwide income of the relevant individual. And for this reason, rental income, income obtained by means of leasing a property in Spain, and the so-called deemed income, which is a presumption of real estate income obtained by individuals resident in Spain as a result of being the owner of a property in Spain which is empty, no rented or effectively rented, are both of them taxed under personal income tax. Personal income tax essentially is a tax which is adjusted to the personal and specific circumstances of each taxpayer by means of deductions, reductions of the tax base, certain allowances. So it's a very complex tax, but it's important to bear in mind that the purpose of the law is adjust the tax to every single situation. On this basis, the main question on personal income tax, essentially for non-Spanish native people, which is the tax rate applicable to the income obtained in Spain. personal income tax is a progressive tax.
Okay.
This means that it's not a flat rate applicable on the tax base, but a progressive scale according to different thresholds of income, which tax the relevant income under different and progressive tax rates. Here in Andalusia, because personal income tax is the general tax, the general income, the determination of the progressive scale is transferred in some extent to the autonomous regions. Here in Andalusia, the general income which includes, among others, the rental income and the deemed real estate income, is taxed under a progressive scale, which tax rates are around 19% in the lower part of the scale until around 47% for those income higher than 300,000 euros. This is the current situation. As you know, taxes are changing every single day,
of course.
It's important to bear in mind that specific advice must be covered if someone wants to transfer his or her tax residence to Spain in order to determine the applicable tax rates in this specific moment. I have talked about general income, but the savings income, which are also taxed under personal income tax, are taxed under different tax rates, also by means of a progressive scale. Savings income entails essentially dividends, interest, capital gains arising from the transfer of assets. They are taxed under lower tax rates. Essentially, the tax scale comes from 19% in the lower threshold until 28% in this specific moment. On the other hand, non-resident income tax. Non-resident income tax tax just for Spanish non-resident individuals or companies the Spanish source income. That means essentially, and for the interest here, real estate income obtained by means of a real estate property in Spain. Rental and deemed income, which is different. Rental income for European Union residents is taxed under 19% tax rate, and the tax base allows to deduct all of the expenses borne as a result of the rental activity. On the other hand, we have non-European tax residents, which are taxed under a 24% tax rate, which is a little bit higher. And on the other hand, they are not allowed to deduct the expenses borne as a result of the rental activity. So they are taxed under the gross income obtained as a result of the rental activity.
Fantastic.
Which is a very important distinction, essentially, when you are planifying an investment in Spain and not acquiring a property just for use and enjoyment.
Of course, yes. They need to know all the costs involved.
Non-resident individuals, in the same way that the Spanish tax-resident individuals, are also levied on this so-called deemed real estate income, which is, as I explained previously, a sort of presumption that you are the owner of a property which is empty and you potentially can obtain rents from it, but as a result of being empty or as a result of being your secondary dwelling for vacancies purposes, you are not obtaining this income. How this deemed income is calculated? Applying a rate of 1.1% or 2% according to the specific circumstances of each real estate property on the cadastral value or the acquisition value, according also from the specific circumstance of the real estate asset. So it's also very important, in order to determine the specific amount to be paid as a result of this deemed income, analyze each case separately and individually for this purpose. That is with regard to individuals. Why? Because companies are not taxed under this deemed real estate income. Many times clients ask us about the possibility to incorporate a Spanish company or about the possibility to acquire a real estate asset by means of a foreign entity. Essentially, companies in Spain are taxed under corporate income tax, which is similar to the concept under personal income tax, in the sense that it is this tax try to levy the worldwide income of the company, of the Spanish company. Also, and I have not mentioned that for personal income tax, but it's the same. There exists deductions and exemption in order to avoid double international taxation, which is important for foreign investors.
Of course.
Non-resident companies which obtain Spanish source income, essentially real estate income, are taxed according to the previous difference between European and non-European as individuals, but the difference is with regard to the deemed income. Companies are not subject to this deemed income.
Okay.
So many times, and coming back to the previous question of a company or not a company, clients see in this lack of taxation of deemed income a good reason to establish a company in order to avoid this taxation. It's important to bear in mind here that when you are acquiring a property in Spain by means of a company, Spanish or not Spanish, you have to establish a transfer pricing policy with your company. Essentially, if you are using and enjoying the asset that the company is acquiring. This means essentially that the relation between your company and you as a result of this asset must be regulated under free market conditions at arm's length in the tax nomenclature. So in this regard, it's important to bear this in mind in order to avoid unforeseen events in the future, essentially because I'm very aware that the Spanish tax administration is auditing and challenging these structures of a property directly held by a company.
Exactly.
And this essentially with regard, and a very broad sense, taxation of real estate income by means of an individual, by means of a company.
Okay.
As you can see, the deemed income is not a very significant or relevant amount to be paid as a tax liability. For European Union residents, many times incorporating a Spanish company, not for sure, but using a legal entity to acquire the property many times implies to incurring more cost to maintain the structure than the benefit in tax scope that they are going to obtain. When you are a non-resident European Union, could make sense incorporate a Spanish company.
Okay.
If you are acquiring the property just in order to obtain a tax benefit, a different tax treatment, and you want to rent it in the market, you're going to be taxed under 24 tax rate, and no expenses can be deducted. On the other hand, you can incorporate a Spanish company, deduct taxes, and if an economic activity is being conducted, also to be analyzed in depth, tax rate could be 23%.
Okay.
Or if the company qualifies as a mere holding company, 25% tax rate is going to be applied under corporate income tax. So the difference is obvious, and the benefits are quite clear, essentially with regard to the deduction of expenses. What is the problem here? That set up, incorporate a Spanish company to acquire a Spanish asset, real estate asset, at least under the last approach with the Spanish tax administration, must be supported by sound economic grounds.
Okay.
This means that you cannot just incorporate a Spanish company instrumentally just to acquire the property. So it's very, very important when potential clients want to acquire a property in Spain by means of a company, analyze the existences of these valid economic reasons supporting the existence of the company in order to avoid also unforeseen situations.
Okay, great.
This is with regard direct taxation, non-resident income tax, personal income tax, corporate income tax. But for sure we have also other taxes
that
affect the ownership of a property in Spain. Very broad and plain vanilla, we have the net wealth tax, temporary solidarity tax on high net worth individuals, which are two taxes covering the same scope of taxation. Spain is a singular country in many ways, but in this way, essentially with regard to taxation on net wealth, is particularly special because we are probably the only country in the world that have two net wealth taxes. So it's I can explain after that. On the other hand, we have the inheritance and gift tax. Net wealth tax and temporary solidarity tax. Net wealth tax for Spanish individuals, Spanish resident individuals, levy the worldwide net wealth around the world, and for non-resident Spanish individual, just tax the Spanish assets or rights that can be exercised in Spanish territory, essentially. Which is the main issue with regard to this net wealth tax, essentially for the interest of non-resident individuals. Different autonomous region in Spain has bonified the whole tax liability of this net wealth tax, among others Andalusia. So if you are resident in Andalusia, or on the other hand the specific rules passed by the Andalusia government applies to you as a non-Spanish tax resident, you can benefit from this 100% bonification on the tax liability, which means that you are not going to pay net wealth tax.
Oh, that's great.
That's great, but the Spanish government 2 years ago passed this so-called temporary solidarity tax. Essentially, this tax aims to tax the net wealth in those situations in which, as a result of a specific regional benefits, are not being the net wealth is not being taxed under the effective tax rates applicable under the net wealth tax law.
Okay.
So in Andalusia, this temporary solidarity tax applies under certain circumstances. Essentially, when your net wealth is higher than 3,700,000 euros, you can be taxed under this specific figure. In the case of non-resident individuals, when your Spanish assets or Spanish rights, the value exceeds from this valuation. So for non-resident individuals, the ownership of a real estate asset in Spain is included under the scope of net wealth temporary solidarity tax. Also, the ownership of interest in a non-listed company, which at least 50% of their assets is composed by real estate assets in Spain. So in both cases, when a potential client has this specific circumstance, and essentially the valuation of this asset is going to be higher than the mentioned threshold, it's important to analyze in depth the possible tax implications arising from both taxes. And finally, the inheritance and gift tax, which essentially implies that the transfer for non-resident individuals of Spanish assets and Spanish rights can be taxed under this tax figure. Also to bear in mind, certain regional bonifications, certain regional benefits can apply. In Andalusia, we have very good benefits in this regard.
Yes, I know.
And it's important also to analyze it in depth when you are acquiring a property here in Spain, essentially to avoid a future situation which is not intended.
And why do you think it's important to plan the transfer of your tax residence into Spain?
This is a very good question. Essentially because tax residency is a factual matter. So it's very important to try to assess a planified transfer of residency in order to avoid unforeseen situations in the future when the action plan is going to be extremely limited as a result of that the facts are as those are and you cannot change it in the sense to adjust your tax residency.
Yeah, it's better to do it at the beginning, you know?
For sure.
Or to start talking with a tax company or valuation or a guy that told you what are you going to do. I mean, you are here now, you take the decision, you make the decision to move to another country. Okay, let's sit down and see what we need to do.
And this is not just for the Spanish tax perspective, but also for the other countries involved in the tax residency matter. Why? First of all, tax residency, as I said, is a factual matter. So under the Spanish tax law, for individuals, if you spend here more than 183 days in Spanish territory of a permanent basis, you are going to be considered as a Spanish tax resident, at least for a domestic point of view, or if your main economic interests are located in this country. Also, there is a presumption that if your spouse not legally separated or your dependent children live here in Spain and are also tax residents as a result of this previous rule, you are going to be presumed also to be a tax resident.
Okay, even if you don't live here more than 183 days.
This presumption allows evidence on the contrary.
Okay.
You can prove that you are not a Spanish tax resident
Okay.
in this regard. So that said, which is the main problem here? And essentially for those people which are transferring their tax residency to Spain. Firstly, that if you spend here more than 183 days, you are a Spanish tax resident, but in many occasions, your economic interests are usually located in other countries.
In another country, exactly.
Because your source of income is in your origin, in your country, and you have here a conflict of dual tax residency.
Okay.
So this is a problem that must be assessed and must be analyzed in depth in order to determine which of both countries have the power to attract effectively the tax residency of this specific taxpayer.
Okay.
And this is important to be analyzed because, as I said, this is a factual matter. So if you have a permanent resident here in Spain, you can be considered a tax resident here. If your center of personal and economic interests are in Spain, you can be considered a tax resident here in Spain. Or the other country, in the same way, can try to attract the center of economic and vital interest to this country. So at the end of the day, you have a certain problem in order to determine where you are a tax resident and where you have to pay your taxes.
Okay.
So this is important to be assessed at the very beginning of your plan to transfer your tax residency to other country. And also for the so-called exit tax. Many countries have implemented this exit tax, and when the transfer of tax residency is not planified, many times this exit tax is triggered, and you have to pay a relevant amount of taxes as a result of embedded capital gains on certain assets that you hold. So it's important also analyze this transfer of tax resident under this specific perspective. On the other hand, corporate entities, legal entities. The main problem with legal entities are essentially the so-called place of effective management. Okay. And this is very important for those people which are acquiring properties in Spain by means of a Spanish company. Ultimately, the key decisions of this company, although they have been incorporated under Spanish law, are taken in the country where the shareholders or the directors resides.
Okay.
So this country, that country, better said, can try to attract the tax residency of these companies, irrespective of the fact that they are incorporated under the Spanish law.
The last question, Carmelo. Okay, tell me a little bit about this Beckham law. How it works, because a lot of people also ask about it.
Yes, people intending to transfer their tax residence to Spain and being here a tax resident individual can benefit from a specific tax regime which at the end of the day allows them to be taxed just for the Spanish source income, essentially.
Okay.
This means that they are going to be taxed in Spain as a Spanish non-resident individuals, but they have all the benefits to be considered Spanish tax residents.
Okay.
So this is the front line and a very, very broad sense. Which are the ways to transfer your resident here to Spain in order to benefit from this special tax regime? Essentially, by means of an employment contract. You need a labor contract with a Spanish employer or a non-Spanish employer that transfer the place of provision of the services to Spain, or in cases of no specific transfer, rendering those services in Spain by means of electronic and computer ways, essentially. On the other hand, directors can also benefit from this special tax regime, with a disclaimer with regard to mere holding companies. Since in those cases, the director cannot be or cannot hold a stake higher than 25% on the share capital of the company. Entrepreneurs can benefit from this tax regime, but the entrepreneurial activity must be included in between those that are of the interest of the Spanish of Spain. So no every single entrepreneurial activity can benefit from from this special tax regime. And finally, highly qualified professionals that intend to provide services to startups or that are involved within the framework of research, development, and innovation.
Okay.
That is the ways that, in which you can apply for this special tax regime. Which is the other flip side of the coin, that also your family and your children can benefit of this special tax regime. Essentially, both for the family and the individual applying for this tax regime, they cannot be a Spanish tax resident during the prior 5 years.
Okay.
They cannot conduct a business activity or obtain income by means of a permanent establishment in Spain.
Okay.
And the income obtained by the family cannot be higher than the income obtained by the relevant individual applying for the for this tax regime.
That's reasonable.
The main point here is that this regime is a very formalistic one, which means that the application for this tax regime must be conducted in a very specific way. The Spanish tax authorities are very thorough with providing the relevant information.
Yes,
so it's very, very important be advised by a tax lawyer in this path in order to apply correctly, and also be ensured that that you are complying with the requirements to benefit from this special tax regime.
This is a very specified thing, you know.
Yes.
Not for everyone, okay, but it happen.
But absolutely.
Excellent. Well, Carmelo, thank you very much for your time.
You are very welcome, and I said I'm very happy to be here. And
fantastic.
It has been a pleasure.
Pleasure to meet you, and thank you for the time again.